I have some very important information to go over with you right now. If you are holding cryptocurrencies, we're going to be taking a look at the Ethereum and Bitcoin charts right now because this week is going to be absolutely critical as the dollar had crashed the stock market last week, which cryptos are following right now. So in this video, we're going to be taking a look at what's going to be happening this week. Are cryptos going to bounce up or are they going to continue to crash in this bear market? So make sure you give this video a thumbs up and stay until the very end if you want to find out what's going to be happening with cryptocurrencies. So what we can see here, ladies and gentlemen, is this headline right here, how crypto sectors are trading through the dollar strength tsunami. And what we can see is that cryptocurrencies, they react to a world of inflation and higher interest rates. And this is really what has been determining. And this is what is really determining the volatility and the trajectory where cryptos are headed to right now. But we're going to take a look in the charts. I'm going to show you exactly what's happening. So let's go ahead and take a look at Bitcoin. Let's take a look at Ethereum. Some very important things are happening right now. And what is dictating and moving these charts is going to be none other than the S&P 500 futures here. So the S&P 500 is basically the best 500 companies and stocks in the world in a lot of different industries, right? This is basically what the S&P 500 is. So it's a very good look at the economy of the United States and how the economy works and moves. So the S&P is in a very violent downtrend, and this thing, especially recently, has had a massive crash. But if we take a look at the S&P 500, we are getting very close and we're pretty much on a major support level here. And that is going to be about 36.3 or 3,630, that number. So 363, the SPY is going to be about that same number. This is a major support level. This was the support level that held us up in the June crash where cryptocurrencies and everything crashed significantly. This was the major support level that held us up. Now, if we break this support level, which is probably quite likely given our current economic scenario with high inflation and interest rates, I believe that this is going to break. Whether it's going to break this week or tomorrow, I'm not sure. I do believe it's going to break, but before it breaks, we might get some short-term relief to trap traders into this downtrend. I'm thinking that that's what's going to be the case, but that may or may not be the case. But if we do get a bounce off this support, which is quite likely since it's at a major support level, we might get some short-term relief, which will in turn push up cryptocurrencies a good bit. We might get a decent 10-20% move off of this. And then we will most likely continue this downtrend, which we are in. And that is if cryptocurrencies continue to not decouple from the traditional markets. So depending on what happens with the S&P 500 and the traditional markets, the futures have just opened up and the futures are, the S&P 500 is red, the dollar is going up again. Not really much, and don't really be concerned too much with what happens when the futures markets just open up, because usually when they first open up, that's not really the real move. The real move takes place a couple of hours before the stock market with the futures market. So we're going to have to analyze and see the situation and how it is. But the US dollar is continuing to pump. I mean, this is just absolutely ridiculous. This thing is continuing to break insane highs. And when this happens, guess what happens? The inverse of what we want to happen in the crypto market happens. Look at these crashes. The crashes happen when the DXY is continuing to pump. This thing has not stopped pumping for quite some time. It is in a very, very strong bull trend. And there is going to be things that can stop this. And what will stop this is the Fed needs to chill out. The Fed needs to stop aggressively raising interest rates, which they're going to be doing the next sessions, most likely determined and based on data that shows inflation coming down. If inflation can show itself to come down, that information and data is going to cool off the DXY. Other currencies around the world, the yen, the Japanese yen, and the euro, when these things continue to weaken as they're being weakened, especially as the US dollar is increasing, that pumps the DXY as well. The DXY is the US dollar index, and the US dollar index is basically a composite of several currencies around the world compared to the US dollar, the Japanese yen, the pound, and so forth. And those currencies are not looking good either because their economies, they have high inflation. They have a whole bunch of stuff that's happening similar to the United States. So everything is depending upon the DXY. The DXY moves the S&P 500. The S&P 500 moves cryptos. So if we can get the DXY to crash, if the dollar can weaken, if the dollar can crash, that's going to help cryptocurrencies for the short term. But because we are in a recession, because we're in a very bearish scenario, it is very likely that stocks and cryptos are probably going to continue heading down for several months, for quite some time, because they're going to continue to raise interest rates for many years, for several years. What it's going to take for cryptocurrencies to start going up and the stock market to start going up is when the news of inflation is finally cooling off. And that will happen when they raise high interest rates, when they raise interest rates higher. That's going to immediately affect inflation. That's going to immediately affect inflation, which will immediately affect cryptocurrencies. Once traders can start to understand and anticipate that inflation is coming down, that's when the dollar is going to cool off. That's when cryptocurrencies are going to begin to recover. That's when stocks are going to begin to recover. But there is a scenario which could happen here very soon that cryptos will decouple from the stock market. The stock market will continue to crash. People will realize that gold and other assets are going to be better to put their money into. So they will invest in gold, silver, and also cryptocurrencies. And that's why cryptos were created, for situations like this. So that could be a real scenario here very soon. We're going to see if that's going to play out here like it did last year. As far as the immediate short term for cryptocurrencies, we are in a consolidation and we are getting a bearish breakout for Ethereum. Ethereum is finally breaking out of this consolidation pattern. And the same is being said of Bitcoin. So Bitcoin and Ethereum are forming basically the same type of pattern, which we can see we are breaking down to a degree. I'm not sure if there's going to be a big breakout to the downside or not, but this is not a good sign. It's not a bullish sign that we're breaking out of these symmetrical triangle patterns on the lower side. Now, a breakout is determined not by just coming out of the pattern, by coming out of the pattern with momentum. So we have not yet got that momentum that we're looking for to confirm this breakout. And guess what? When these breakouts happen, this is typically when I begin to open up my short positions. And that's when real money is made, because you can sell your cryptocurrencies that you have by trading them, selling, let them crash lower. You can buy the dip here. And at the same time, you can ride this wave down by shorting it over on Bybit, which you can claim a $5,000 deposit bonus by using the link in my video description. If you are in the US, make sure you use a VPN. So if you want to get access to all of these buy alerts and trade alerts when to buy and sell cryptocurrencies, join the Patreon right now. I have a new course and mentoring program to teach you how to make 1% to 2% every single day trading cryptocurrencies. If you're interested in that, apply with the link in my video description. That's going to be it for this video. Thank you so much for staying to the end. Please consider giving this video a thumbs up, and I will see you all tomorrow.